Hi everybody, welcome to the Baguette Investor channel for a new video. With the correction happening, it's a very good time to teach you again about relative strength and about potential leading sectors that will emerge when the bounce comes. And it's very simple to do it. You will see it in just a few seconds. So to begin with, we have the Nasdaq, which is making kind of the first correction since the COVID crash, which is just a small correction that I believe is going to be much deeper, considering how weighted the Nasdaq is and how the charts from the biggest stocks in the Nasdaq look. You think about Google, Microsoft, Netflix, Apple, Salesforce, and all these big tech stocks that just need to correct and are completely overvalued. Of course, I'm not doing any prediction. I'm not going to short the hell out of this market because I'm not really good at shorting. But what I want to talk about is it's going to be very obvious to you to see the Nasdaq here. You put that into your head. Remember how this stock market is behaving right now. So this is the Nasdaq index, which is mostly weighted in heavy growth stocks. As you know, Nasdaq is really the place to be for growth stocks. And now we're going to take a look at another index. We're going to take a look at the S&P 500. So the second thing you see about the S&P 500 is that the index looks weaker on the upside, but also weaker on the downside. It's more of a choppy market. If you look at the equal weight S&P, you can see that it doesn't look like it's trending at all. It's a simple straight line. If you draw a line on the trend, you can see that the line is not very stiff. A strong trend would be, for example, there, the trend was very strong. Right there, the trend is very weak and very choppy. But you can see there is no big correction in the equal weight S&P. It's not breaking to new all-time lows. It's just hovering around this zone. Now we're going to take a look at the technology sector. You can see the technology sector has gone up a lot, but has also gone down a lot. And now we're going to take a look at the energy sector. And you can see that the energy sector has a completely different chart than the technology sector. I'm going to put both in front of your eyes so you see how they're behaving over the long term. Look at how over the long term they are just two completely different trends. Now right now we're seeing something very interesting. I'm seeing, where is this paper? It's right there. I had a French guy, very interesting topics he's covering in his Twitter. It's in French, so you're not going to be very interested. But for me, it's very interesting. And what we're looking at here is in English. You can see that funds and smart money is really putting money out of tech and putting money into value stocks. I've been talking about this for so long, talking about the rotation between growth to value. And this scenario, this narrative seems to be appearing into the charts. Why? Because just look at the difference between what's happening for tech and energy. They are moving into opposite direction, which means that if energy keeps going up, this would mean tech going down. We could go into the fundamentals, into the why. I'm not really interested right now when I do technical analysis about the why. I'm talking about what's happening. And what's happening is you can see the start of a rotation from energy, from technology to energy. And the biggest indicator I've been watching for a while is this ratio between oil and gas and technology stocks. For like 2008 Great Recession, it has been in a downtrend, which means that energy stocks have been technology stocks have been outperforming energy stocks. And now you can see that maybe things are starting to change, and we make a bottom on there, a potential bottom. And if we start to see a new bullish trend on this index and we start to see some bullish momentum, that would mean that maybe over the next few years and over the next decade, technology is not going to be the place to be. The place to be is going to be value. And we are witnessing right now this scenario. I remember, was like right there in October. I called for a potential breakout. Did not happen. We had breakdown. And now we're starting to have a second potential breakout. So this is a really, really important level that I'm watching. I had my alert set This is why it's labeled here as a sub over QQQ. But yeah, really pay attention. And when you look at this sector, look at the stocks, how they're behaving. If you look at Chevron, which is, you probably know Chevron if you live in the United States, but if you're from Europe like me, you might know the company from the stock market, but not really into the real world. It's one of the biggest oil companies in the United States and in the world, basically. How much it's worth? It's worth $245 billion, which is pretty high number, but it's still less than the big tech numbers. You can see it's trying to make a new all-time high. The all-time high for this stock is at something like 135.22, and right now we're at 132.59. So very, very close to a new all-time high. And can you believe that these stocks are making all-time highs in this market? People think that all the sectors, all the markets are dumping. It's only pretty much technology that is dumping, really growth stocks and technology. But if you look at other sectors like financials, they're in the greens and they're not dumping like crazy. Of course, they're choppy, but they've been choppy since May, like pretty much all the stocks. But energy, financials, materials don't look as bad as technology. What really looks bad to me is really technology looks very bad, because it just has gone up so much that things eventually need to go down and to correct. That's how markets rotate and work. But yeah, really pay attention to what's happening in energy and just take a look at this stock, Chevron. It's moving like crazy. There are the earnings in 3 days. I mean, would you imagine the earnings making the stock go to all-time high? That will be one of the most bullish signals you could get on stocks like this. This is just amazing. And there are plenty of other energy stocks that just seem to hold very nicely. You have ENI for European friends and my Italian friends that just doesn't want to go down. Look at this. Compare this to Microsoft. We're going to compare this to the Microsoft chart. Look how different that is. You have two stocks moving in the absolutely opposite direction, and that's absolutely amazing. That's so interesting to look at, and I hope you're looking at it at the same time as I'm looking at it, because I'm really trying to position myself to make some money. I have my eye on the my hand on the trigger to really go strong when the market will bounce, and I think that the sector that might bounce the hardest and that will carry the best trend in the future might really be in energy, and this is going to be the place to be in the next decades. So of course we're looking at daily signals, so not really any reason to rush. But yeah, looking at this, this means that the oil and gas sector is completely undervalued compared to the tech sector, or that the tech sector is completely overvalued. That's the same thing. But you really, really should look at this. I'm pushing it so hard to you. Take a look at this and yeah, tell me what you think.